given that we've started to see pretty up and down days on the market as opposed to sustained periods of weakness, what is your view on the current state of the Nigerian markets?
Thank you. I think the currency of the Nigerian market is really a holding pattern. I think most investors are waiting for the results of the second round of audits for the banks, and while they wait for that, because until all the results of the banks are out and the common year end is finished in December, most investors are on a waiting pattern. Most of the rises we've seen, once the rise reaches about 5–6% level, most investors take profit. And I think we're going to continue seeing that pattern going forward until probably first quarter next year.
Well, of course, as you say, we've got banking sector news dominating, but then also news flow surrounding the oil sector stealing a bit of attention. So in this context, where we've had reports like the one we saw out of Fitch Ratings last week, where it's revised the outlook on the long-term ratings of the Bayelsa state, as well as long-term national and international ratings as well. What role do ratings reports like that play in the current environment where we've got such strong news flow in the dominant sectors of the economy?
I think you hit the nail right there. The problem is that at the moment in Nigeria, the news flow is, there's news coming out all the time on a regular basis. And quite frankly, I think it's quite hard for the rating agencies to keep up. In a sense, for example, in Bayelsa State, for example, the movements with when the rating report was coming out, was the amnesty hadn't kicked in. Now with the amnesty and the major militants in Bayelsa State have given up, said they're going to follow the amnesty and given up their arms, the outlook for Bayelsa State and oil production there has now looked up and then in Q4 this year. But the rating agencies probably haven't taken that into account. I think we're going to see that going forward, that while we have all these major news items and the changes happening in Nigeria, especially in this quarter and probably Q1 next year, I think it's going to be quite hard for the rating agencies to keep up.
And given the fact that they are finding it difficult to keep up, it's not surprising that markets aren't really reacting to this news. Also to bear in mind, Jay, is that we've got Bayelsa State having confirmed that it will access the local debt market in the future, trying to access at least 50 billion naira to fund investments over the medium term. What's your view on that proposal?
It's very interesting. The proposal has received, has divided the state really politically. The government has announced they want to 100 billion naira program, and they're looking at the first issuance of about 50 billion to fund long-term infrastructure projects. That's a good policy going forward as long as the money is spent on infrastructure projects. But there's been, the Bayelsa State, the political opposition have said that the state's already heavily indebted and cannot afford to take on more debt at this moment in time until they pay back some of the debt. So you have the political forces on both sides for and against the bond. But I think in reality, I think what the government of Bayelsa State really needs to do is enlighten the Bayelsa public about the current state of the indebtedness of the country, and convince people that they can afford to take on new debt, and exactly show whether that new debt, what infrastructure projects that new debt is going to be used for.
How successful do you see that appeal being? Because this is in a context where we've got various corporates also planning to forge again with their own corporate bond issues. The latest amongst them is Diamond Bank, who said, whose shareholders at the last AGM said that they supported management's plan to raise additional capital via this route.
Yeah, I think what we're seeing is a bit crowding out of the bond market, because we have 4 major banks in Nigeria announcing quite big bond programs, and then a number of states are also coming in, trying to tap into that same market. Now, the issue for Bayelsa is that Bayelsa, as a top oil-producing state, should be in a strong position to be able to attract investors to its bond. But then again, when you have the likes of First Bank and GT Bank, who already have a Eurobond issue out, which has performed reasonably well and have a track record in the market, coming in and saying they're going to tap into the market as well, you are going to see, I think, overcrowding in the market, and it might lead to higher interest rates on the bonds. which will be good for investors.
So certainly lots of activity happening, or anticipated activity, on the fixed income side of things. Back to the equity segment here. I mean, what we are starting to see are investors shifting their attention slightly from banking sectors, the banking sector, to other sectors that offer some stability and good dividends as well. There's a lot of emphasis being placed on that. What would be a stock pick in your books that demonstrates those characteristics?
I think what we're seeing, I think really is the blue chip. It's the blue chip consumer companies such as Nigerian Breweries, Guinness, UAC. I think those companies will always do well. They have a reputation, they have brands, they have the consumer loyalty and the consumer base. And they also, especially in this time, they have access to international credit, which with the current slowdown in local credit in the Nigerian market is also a plus. I think what we're seeing is that they're announcing good, strong profits and strong dividends. And I think investors are looking towards them as a good investment, especially with the current travails in the banking sector.